The mic is hot. Let's break this down. For a guy who brags about the stock market like it's his personal scoreboard, the silence from Wall Street right now is deafening. Forget the tweets for a second, forget the rallies, turn off the TV. If you look at the actual money, I'm talking about the trillions of dollars moving through the bond market right now, the stuff that actually decides if you can afford a house or a car, the verdict is in, and it is brutal. On December 9th, while everyone was distracted by the cabinet show, Reuters dropped a bombshell. The global markets have officially stopped believing Donald Trump. I mean, really let that sink in. The deal maker, the business guy, the markets are looking at his new Fed pick, Kevin Hassett, and they are saying, "We don't trust you." The administration is out there promising the golden age, right? Rates are crashing, mortgages will be 3% again, free money for everyone. But the futures market, the people who actually have to put cash on the line, they are pricing in, wait for it, 75 basis points of cuts, total, over the next 2 years. That isn't a slash, that isn't a boom, that is a rounding error. That is the market telling the President of the United States, your math doesn't work, your tax cuts are inflationary, your tariffs are inflationary, and if you try to force cheap money into this fire, we will burn the house down. We are watching a slow-motion collision between a political fantasy and an economic brick wall. Trump thinks he can bully the bond market like he bullies a primary opponent, but the bond market doesn't care about polls. It only cares about yield. And right now, the yield curve is screaming danger. If you're sitting there thinking, who cares about the Fed chair? You need to wake up. This is the difference between your 401k growing and your 401k evaporating in an inflation spike that makes 2022 look like a picnic. This is self-inflicted. This is economic suicide. And the worst part, they think they can still bluff their way out of it. Let me show you why they can't. The mic is hot. Let's break this down. Let me take you back to a time that feels like ancient history, say 2019. Back then, the Federal Reserve was boring. It was supposed to be boring. The chair was like the designated driver at a frat party. Nobody liked him, but everybody needed him to stay sober so the car didn't wrap around a telephone pole. The deal was simple. Politicians scream for growth, growth, growth. And the Fed quietly looks at the data and says, no, we can't print that much money, or a gallon of milk will cost $50. That tension, that wall between the White House and the printing press, is the only reason the US dollar is the world's reserve currency. It's the reason global investors park their cash here. They trust that the guy in charge of the money supply isn't checking his phone for tweets before he sets interest rates. But on December 9th, 2025, that wall didn't just crack. It was bulldozed. Here is the catalyst. The reports coming out of the transition team confirm that Trump isn't just looking for a new Fed chair to replace Jerome Powell when his term ends next May. He is setting up a shadow chair. He wants Kevin Hassett, a loyalist, a guy who's practically sworn a blood oath to the low-rate agenda, to effectively start running the show now. The plan is to have Hassett announce what the rate should be, undermining Powell every single day until May. Now, I know what you're thinking. So what? Who cares about the nerdy politics? Trump is a businessman. He wants stocks to go up. If he wants lower rates, that means cheaper mortgages for me, right? Wrong. This is the most dangerous misunderstanding in economics right now. You're assuming that the president controls mortgage rates. He doesn't. The market controls mortgage rates. The Fed just controls the overnight rate, the short-term stuff. If the market thinks the president is forcing the Fed to cut rates artificially, if they think he's pouring gas on an inflationary fire just to boost his poll numbers, they will freak out. They will sell U.S. bonds, and when they sell bonds, the yield on those bonds shoots up. And guess what mortgage rates are pegged to? The 10-year bond yield. So Trump could force the Fed to cut the official rate to 0%, but if the market panics, your mortgage rate could spike to 9%. You get the inflation of the 1970s with the housing market of 2008. Look at the data. It's already happening. The White House is promising massive tax cuts. We're talking trillions added to the deficit. At the same time, they are promising 60% tariffs on China, which raises prices on everything at Walmart. So you have more debt, inflationary, higher import prices, inflationary, and now a Fed chair who refuses to raise rates to stop it. That isn't a golden age. That is an inflationary death spiral. They told you inflation was down to 3%, right? Go look at the price of insurance. Go look at childcare. Go look at beef. That isn't 3%. That is survival mode. And the bond market sees exactly what you see. They see a government that is addicted to spending and refuses to pay the bill. The truly terrifying part. Trump thinks he has a cheat code. He thinks he can just fire Powell, install Hassett, and order the rates down by decree. He thinks he's the CEO of America. But the bond market is about to remind him he's just a debtor. And the creditors are calling in the loan. You want to know how this mechanism actually breaks? You want to see the gears grinding to a halt? Let me show you the catch-22 that nobody in the White House has an answer for. Okay, grab a drink, maybe a stiff one, because we need to get into the engine room. I need you to visualize something for me. Forget the marble columns of the Federal Reserve. Forget the suits. Imagine the U.S. economy is a massive, sprawling homeowners association. The biggest, richest, loudest HOA in the world. And for the last 40 years, we've had this deal with the neighborhood, which is the rest of the world. The deal was, you lend us money, we buy your stuff, and we promise not to burn the neighborhood down. The Federal Reserve Chair, he's the HOA treasurer. His only job is to make sure the dues get paid and the property values don't crash. He's the guy who has to be the buzzkill. When the residents, that's the politicians, want to build a gold-plated swimming pool they can't afford, the treasurer has to say, no, we don't have the reserves. Raise the dues or kill the pool. It's not a fun job. It's a necessary job. But right now, the president of the HOA is trying to kick down the treasurer's door. He wants to install his buddy, let's call him Kevin, who has promised that we can build the gold pool, slash the HOA dues to 0, and somehow still pay the bills. And the neighbors, the banks, the pension funds, the foreign governments who lend us money, they are standing on their lawns watching this happen, and they are terrified. This is the mechanism of the collapse. This is how the bond vigilantes wake up. I know, bond vigilante sounds like a bad 80s action movie, but in the financial world, they are the deadliest force on earth. They are the collective mass of investors who own U.S. debt. And here's the secret that Washington forgets. The vigilantes have more power than the president. Here is the logic chain. Follow me closely, because this is where the golden age narrative hits the wood chipper. The U.S. government runs on debt. Massive, incomprehensible amounts of debt. We spend way more than we make. To keep the lights on, we have to sell U.S. Treasury bonds every single week. We are constantly begging the world, please buy our debt. Please buy our debt. Usually, the world says yes. Why? Because the US dollar is safe. Because the Fed is independent. They know that if inflation starts to rise, the adult in the room, the Fed chair, will raise rates to cool it down. It's a trust exercise. But now, look at the new equation. You have Trump's shadow chair, Kevin Hassett, signaling that he doesn't care about the data. He cares about the vibes. He cares about the campaign promise. The signal being sent to the market is, we will prioritize cheap money over stable prices. So, you're a bond vigilante, you're a pension fund manager in Tokyo, or a hedge fund guy in Connecticut, you see this. You see that the new management is going to let inflation run wild to keep the party going. What do? You do the only rational thing. You demand a risk premium. You say, okay, America, you want to borrow money for 10 years? Fine,
But I know in 10 years, your dollars are going to be worth less because of all this inflation you're causing. So I'm not letting you to 4%. I want 6%. No, actually, make it 7%. I need insurance against your stupidity. This is the bond market revolt. And here is the catch-22, the trap that Trump is walking blindly into. When the vigilantes demand higher yields, long-term interest rates go up. Remember, the Fed controls the short-term rate, the overnight rate, but the vigilantes control the long-term rate, the 10-year Treasury. And guess what your 30-year fixed mortgage is based on? Guess what corporate loans are based on? The 10-year Treasury. So picture this nightmare scenario. It's mid-2026. Trump orders Hassett to cut the Fed funds rate to 2%. Look, lowest rates ever. I did it. But because the market is terrified of the inflation that cut will cause, they sell bonds. The 10-year Treasury yield spikes to 6%. Mortgage rates hit 9%. Do you see the irony? The harder Trump tries to force rates down artificially, the higher the actual rates for you and me will go. It's like trying to push a beach ball underwater. You can force it down for a second, but the pressure builds, and when it shoots up, it hits you in the face. This creates a doom loop. The economy starts to slow down because mortgage rates are 9%. No one is buying houses. Construction stops. Trump sees the economy slowing. He screams, "Cut rates more." Hassett cuts rates more. He prints more money. The market sees more inflation. They panic even harder. They sell more bonds. Yields go higher. Mortgage rates go to 10%. The economy slows even more. Rinse, repeat, collapse. This isn't theory. We have seen this movie before. Look at the UK in 2022. Liz Truss, remember her? The prime minister for about 15 minutes? She tried this. She announced massive tax cuts without a way to pay for them. She tried to bully the markets into growth. What happened? The British bond market puked. Rates skyrocketed overnight. Pension funds almost collapsed. The central bank had to step in with a panic bailout. She was gone in 49 days. The US is bigger than the UK. We are the Titanic. But even the Titanic has a tipping point. And we haven't even talked about the foreign angle yet. This is the part that keeps me up at night. Who buys our debt? China, Japan, Europe. What happens when they see the US president treating the Federal Reserve like a political toy? What happens when they see the dollar being debased on purpose to fund a trade war? They stop buying. Or worse, they start selling. If Japan decides to dump its US treasuries because they don't trust Hassett, the interest rate spike we are talking about won't be a slow climb. It will be a vertical line, a limit-up move. Imagine waking up on a Tuesday and the interest rate on your credit card has jumped 5% overnight. Imagine small businesses getting letters from their banks saying, "Sorry, your line of credit is frozen," because the liquidity markets are seizing up. That is what a credibility crisis looks like on the ground. It's not a chart on CNBC. It's a closed sign on the hardware store down the street. The mechanism is broken because trust is broken. Finance is nothing but trust. It's faith. A dollar bill is just a piece of paper. It only has value because we all agree the guy signing it is good for it. When you install a loyalist specifically to manipulate the value of that money for political gain, you are burning that trust. You are taking the full faith and credit of the United States and lighting it on fire to keep the stock market warm for another quarter. I wish I was exaggerating. I wish I could tell you, oh, systems are robust. There are checks and balances. But the bond market is the ultimate check and balance. And right now, it is voting no confidence. The scary part, we haven't even reached the point of no return yet. That comes next. That comes when the inflation actually hits the shelves and the Fed has no tools left to fight it because they broke them all on purpose. Let me walk you through the fallout, because when this domino falls, it doesn't just hit Wall Street. It hits Main Street like a freight train. So where does this train actually stop? Because we are barreling down the track and the conductor is arguing with the engineer about physics. I want to give you the best case scenario first. I really do. I want to tell you that this is all just posturing, the art of the deal, right? Maybe Trump sees the bond market revolting next week, gets spiffed, and quietly tells Hassett to stand down. Maybe the adults in the room step in, Powell finishes his term with dignity, and we get a soft landing. That is the fairy tale. That is the outcome where cooler heads prevail. But I am not paid to sell you fairy tales. I'm here to tell you the ugly truth. The ugly truth is that we are flirting with Erdoganomics.
If you don't know what happened in Turkey, look it up. President Erdogan decided that high interest rates were evil. He fired central banker after central banker until he found a loyalist who would cut rates while inflation was skyrocketing. The result? Inflation hit 80%. The currency collapsed. People saw their life savings wiped out in months. They were millionaires on paper and couldn't afford bread. Now, the US is not Turkey. We have the world's reserve currency. We have a buffer. But we are not immune to gravity. If the shadow Fed plan goes through and we start printing money to fund populist checks and tax cuts, here is the 2030 vision. Picture it. 5 years from now, you walk into a grocery store. A gallon of milk is $12. A pound of ground beef is $20. You aren't shocked anymore, you're just tired. You look at the housing market. Your house is worth double what you paid for it. Great, right? Wrong. You can't sell it. Why? Because mortgage rates are sitting at 11% and nobody can afford to buy it. You are trapped in your wealth. The stock market is hitting all-time highs every day. The news anchors are cheering, dial 50,000, but your portfolio buys half as much as it did in 2024. It's the money illusion. The number goes up, but the value goes down. This is the Latin Americanization of the US economy. The rich, who own assets, stocks, and real estate, get richer because inflation pumps up their asset prices. The working class, who work for wages and keep cash in the bank, get crushed because their paycheck can't keep up with the price of eggs. It is a transfer of wealth, a massive silent theft from the saver to the debtor. And the biggest debtor is the US government. Okay, deep breath, shake it off. I'm not telling you this so you can curl up in a ball. Panic is not a strategy. Preparation is. You can't control the White House. You can't control the Fed, but you can control your own fortress. Here is the action plan. The stuff you can do tomorrow morning. Number 1, kill your variable debt. I cannot stress this enough. If you have credit card debt, if you have a variable rate loan, if you have a HELOC that adjusts, kill it. Attack it with everything you have. In a bond vigilante world, interest rates can spike overnight. You do not want to be the guy holding a loan that jumps from 7% to 15% because Kevin Hassett spooked the markets on a Tuesday. Lock in fixed rates. If you have a 30-year fixed mortgage, congratulations, you won the lottery. Never let it go. Number 2, assets over cash. In a high inflation world, cash is trash. It's an ice cube melting in the sun. You don't need to become a day trader, but you need to understand that holding dollars in a savings account paying 0.1% is a guaranteed loss. You want to own things that are real. Real estate, profitable companies, commodities, skills, things that the government can't print. Number 3, ignore the CPI. The government is going to tell you inflation is moderate. They will change the calculation. They will swap out steak for hamburger in the basket of goods. Don't believe them. Believe your receipt. If your personal inflation rate is 10%, invest and spend like it is 10%. Trust your own eyes over their spreadsheets. And finally, number 4, watch the 10-year Treasury. Stop watching the Dow Jones. It's vanity. Start watching the U.S. 10-year Treasury yield. That is the true heartbeat of the system. If you see that number spiking above 5%, 5.5%, 6%, take cover. That is the alarm bell ringing. Look, they are banking on you being distracted. They are banking on you fighting about culture wars while they dilute the currency to pay for their promises. They are gambling with the full faith and credit of the United States. That is a dangerous game. But now you know the rules. And if you know the rules, you don't have to be the victim. Keep your head on a swivel, watch the bonds, and don't let them gaslight you into thinking this is normal. It's not normal. It's a reckoning. Stay safe out there. I'll see you on the other side.